The descendants of Walmart founder Sam Walton saw their fortunes shrink by nearly $13 billion on Thursday, after the world's largest retailer reported profits that fell short of expectations and said it would ramp up spending in the year ahead. Shares of Walmart fell 6% on Thursday, quickly knocking over $25 billion from its market cap and dragging down the Dow. The big box retailer reported strong sales over the 2020 holiday period, fueled in part by a 69% jump in U.S. e-commerce sales, but earnings for the period fell short of Wall Street expectations. It also warned investors that slower sales growth and higher spending were ahead. Walmart is targeting about $14 billion in capital expenditures in its current fiscal year, up from a rate of $10 billion to $11 billion during the past 5 years, as it invests further in automation, supply chain and its digital presence to serve shoppers in new ways. Like many big box retailers, it has looked to capitalize on strong demand for groceries and other essentials during the pandemic by rolling out curbside pickup at many of its locations and investing in automation to help fulfill more orders faster. It introduced a new membership program last year called Walmart Plus, which offers unlimited free delivery from stores, among other benefits. It costs $98 a year or $12.95 a month. The company also said it would raise pay for 425,000 U.S. workers to at least $13 an hour next month. That brings the average wages for American workforce above $15, up from an average above $14 a year ago. However, its minimum starting wage remains at $11 an hour. On a call Thursday with investors, CEO Doug McMillon said the company wants to give workers a ladder of opportunity to start at an entry-level position and work their way towards a higher-paying job. More than 3/4 of its store managers started as hourly workers, the company said. "This is a time for us to be even more aggressive because of the opportunity we see in front of us," said McMillon in a statement. However, investors are often wary of big investments that weigh on the company's bottom line, and sent the stock tumbling on Thursday. Jim, Rob and Alice Walton, children of founder Sam Walton, saw their fortunes fall by about $3.7 billion apiece. Their sister-in-law Christy Walton, wife of deceased brother John, lost more than $400 million on paper. Her son Lucas, who received a larger share of his father's estate, saw his net worth knocked down by $850 million. Ann Walton Cronky and sister Nancy Walton Laurie, who inherited a stake in the company from their father Bud Walton, brother to Sam, also lost a few $100 million apiece on Thursday. The Waltons are still the wealthiest family in the nation, with a cumulative net worth of $235 billion, thanks to their stake in Walmart. They are trailed by the Koch family, which controls about $100 billion in wealth. Alice is the world's 17th richest person in the world with a net worth of about $64.